Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video, I'd like to look at a market that didn't unfold as anticipated. And this is quite important because there are far too many gurus and software developers that only ever look at the good trades, and they never look at trades that don't unfold as anticipated. So I thought this was very important to do a video on this today, particularly as it follows up on some of the analysis I was doing in our Trading Room Live yesterday. So I just want to take a look at this and just show you my thinking on this. This is what we had yesterday, as we had the market on the 15-minute ES. This is the USE Mini, the ES, on a 15-minute chart, coming down 1, 2, 3, 4, 5. And at this particular point in time, just after the open yesterday, you can see that the market was coming into wave 5 support. Now what I was suggesting is that because it was at the 15-minute support, we were anticipating a rally up into the decision point, as you can see on the chart there, the 15-minute decision point. So that's what I was anticipating. And obviously you see it didn't unfold as anticipated. But what I want to look at now is how I then transferred that analysis down to the 3-minute chart. So here we were at 9:45 with a potential wave 5 low, anticipating a rally up into the 15-minute DP. Now what normally I suggest when this happens is, let's go back to the 3-minute chart and just set this up so we see where we are. So this was the 9:45 low on the 15-minute chart, and if I scroll back like this, we can see what I was anticipating. So this was the wave 5 low, and I was anticipating that the market was going to rally up into this high here. So what I normally look for is when we have a larger degree 15-minute support, which we had at this particular point in time. My favourite trade setup is what I call the Holy Grail trade setup, where we get an initial rally off the low, which we did here, which I consider a wave 1. We then look for an ABC correction, ABC, into a potential trade setup, which we had here. This was a TS4 setup, but it doesn't matter whether it's a TS3, TS1 or TS4. We're anticipating this would be a wave 2 low, and therefore looking to go up to a wave 3. What I would then normally do is put the WPTs on, starting at that low, second click at that low, sorry, that high, third click at that low. You can see our typical wave 3 WPT is there, so I'd anticipate a rally into at least that, if not around this higher decision point level here. So that's what I was suggesting to look for in yesterday's training webinar, and you can see that the analysis was consistent and exactly what we do normally with a lot of my other videos you can see on the website and on YouTube. However, if we scroll forward, you can see that it just clipped you in just by a tick, then came down and stopped out. And in fact, the ES carried on down, 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 down. And as we can see from the 15-minute chart, it just carried on making new lows. So the question we have to ask ourselves is, were we wrong in doing this analysis because it didn't unfold as anticipated? Well, not at all. Not at all. Trading is all about probabilities. We know from prior experience that if Holy Grail trade setups like these unfold as anticipated, we get profits that are large. In this case, we're anticipating at least a 5R profit. But we also know that when the market does not unfold as anticipated, and this is a very, very important lesson in that markets do not always unfold as anticipated. And here is one of those occasions. But the point being is, because we use correct position sizing, in this case varying the number of contracts, lots or shares, to keep our initial risk small and under control, it means when the loss came through, it was kept small. So here we were anticipating a potential 5R profit, and we were willing to risk a minus 1R loss to get that 5R profit. Now this case, the trade was a losing trade, and it came down as the market kept on going down to new lows. But the point being is that this loss was kept small and under control, and that's the most important aspect of any successful trading system, is that when the losses come through, and they will, and this is why I've done this video, to specifically show you a trade setup that was a losing trade is that when the losses come through, they're kept small, and they're kept small at just -1R. So I just wanted to do this video today, particularly as I had a good look at this setup yesterday in the trading room, and particularly as it didn't unfold as anticipated. There were other setups that some of you guys were looking at in the trading room, particularly this TS2 sell on the 3-minute YM. STF was red all day, so the trend was down, and you can see this trade did go down to the first target for a nice +3R profit. There's also a nice trade, short trade on the NQ, again standard trade management guidelines, red STF, and also on the Russell Index there was a nice TS4 sell there into the low of the day on the Russell Index. So there were other trades yesterday that did actually make some nice profits on the USE minis, but I specifically wanted to do the video on this particular trade setup that failed because it was I talked about it at the time, and I set it up using the larger degree time frame and this wave 5 low. So that's the lesson for today, is that even though you do some great analysis and everything looks to be coming together, sometimes the market will go through your trade and you'll end up with a loss, and that is okay. It is very important to understand that all successful trading approaches have losses, but the most important thing is the losses are kept small and under control. So that's the lesson for today, is that losses can do and they will happen, but the important thing for you as the trader is to use correct position sizing to keep the losses small and under control when they do unfold.